Hello, everyone. Kevin Carrillo here, and welcome to another episode of the Cannabinoid Connect podcast. My guest today is Matt Hawkins, managing partner at Entourage Effect Capital. Matt Hawkins, how are you?
Great. How are you?
I'm doing well. Good to know that we have a fellow Dallasite. I didn't realize that you were located in Dallas, working in the same industry. So that's awesome. We just talked about that before we recorded.
Yeah, investing in cannabis all the way from Dallas, Texas.
Right. And it's kind of weird, right? Because the laws here, I mean, they're not so friendly, obviously, to cannabis. CBD and other cannabinoids, sure, but when it comes to THC, not so much.
Well, imagine trying to raise money in the city in 2014 when I started it. People looked at me like I had three heads.
I always ask that question for guests. I'm like, if you jumped from another industry or another focus into cannabis, like what was the response from your peers? So it was a lot of, did they think you were crazy, or was it like they were thinking, don't do this because, cannabis is a bad, evil drug?
Well, both. Remember, this is the Bible Belt down here, and so people that are conservative that have invested with me and our groups for various things over the years, a lot of those people didn't have an appetite, and may still not, to be investing in cannabis. And so, we had to expand our horizons big time to go out and find enough high net worth individuals and family offices to cobble together to put together our first fund. And it wasn't easy. I mean, I had people that had invested with me in the past sit me down and tell me that I was going to ruin my reputation. So it was pretty intense.
Yeah, I agree with you in that. Of course, we're in the Bible Belt, very conservative state. But I almost get the sense that maybe it's just Dallas, but while it's conservative, the state also likes to generate revenue for itself and make money, right? The city of Dallas is booming with business. And so would you say that is a factor, or I guess that?
Well, I would say that Dallas, the answer is yes. I think I've had some success, especially in our second fund and now raising our third fund, with bringing in folks from Dallas. The first one was a little bit tricky. It was more friends and family that were in this city, and I had to go elsewhere to find the capital. But I think there's starting to be a realization that there's a market here in Texas for cannabis. It's just all illegal, and so our position has been always, why not tax and regulate this market and convert it to a legalized framework and realize some revenue from that. It's no different than the lottery. There's a state lottery here. So the people that say that we can't do that because there's, moral and ethical reasons, I'm not going to get in that conversation with them. That's their position. But I believe they're just flat wrong, because this market already exists.
Right.
It's here.
Right.
It's a transformation of a market across the nation and nothing different.
And part of it is that stigma, right? Just the association with cannabis. You think Cheech and Chong, or, a pothead or something like that. But it's important, I think, to add on to your point, it's important for people to understand, even if they don't want to use it or have it in their possession, they need to understand the value add of cannabis, both from a medical perspective and from an industrial hemp perspective, right?
That's correct. You're spot on. And I think that there's too many people, and look, this is what we do for, a lot of our, selling for our third fund is really more education. We're just trying to educate people on what the industry is all about, the differences between THC and CBD products and hemp-derived CBD, because they're completely different. A lot of people don't even realize that, that CBD is federally legal through the Farm Bill, as long as the states pick it up. And, hemp is now a recognized crop. And that's a totally different market, though, than what our core business is, which is investing in the, companies involved in the cultivation, manufacturing, sales, and everything in between of licensed THC products.
Yeah, and that's what I want to get into. That obviously your company Entourage Effect Capital. But before we do that, let's give the audience a sense of your background for those who don't know. So Matt Hawkins is the managing partner of Entourage Effect Capital. He has over 20 years of experience in private equity. And you're one of the leading cannabis investors starting in 2014. So you touched on what people's reaction was when you first kind of jumped into this space, but why don't you tell us a little bit about your journey, and then tell us more about Entourage Effect Capital and some of the companies that you're invested in.
Sure. So, like you said, I've been in private equity in Dallas, Texas for over 20 years. Been with an institutional firm. I've worked with some family offices. I've raised several funds on my own for varying strategies. My entree into the space was in 2014 when I had sold a multifamily acquisition platform that was a nice day for my investors and a decent day for me, but needed to get back to work. And one of the things I'd done in the downturn back in 08 and 09 was some private lending opportunities. And I started seeing those types of deals pop up from warehouse owners in Denver, Colorado, looking to refinance their mortgages out of commercial debt into private debt so they could then lease to marijuana growers. Because in 2014, obviously, when the laws changed in Colorado, Oregon, and Washington. So we actually made one of those loans. And then next thing I knew, I had access to all these cannabis deals. But I kept thinking to myself, the yields of these real estate lending plays are going to dry up, because they were nice. I mean, they were 12 to 14% coupons. But we just got lucky and realized that the private equity side of this, if we could get some money raised, that would be a first mover advantage, and that's what I started to do. And we cobbled together $10 million in our first fund, along with another $10 to $15 million of kind of a partnership group. And then our second fund was 60 million, and now we're raising a third fund that'll be hopefully 150 million.
Wow. So you're working on your third fund now. And I know that from what I've read and seen on your website, the companies or the business sectors that you're invested in include technology, biosynthesis, genetics, equipment, manufacturing, you said. So why don't you talk about some of those investments and why you made those bets?
Sure. Well, we also obviously touch the plan a lot too. We invest in brands and multi-state operators, single-state operators, vertically integrated cultivation and manufacturing, et cetera. Two, big successes in our second fund are, the number one pre-rolled company is Sublime. That's one of our investments. We also have the, back and forth number one, number two gummy manufacturer in California called Thunderstorm, which operates under the Kana brand. But yet we also have multiple wins from early investments into, way back when, into GTI and, Acreage when it was High Street Holdings. We invested in Ebu, which sold to Canopy Growth. We were investors in three companies that sold to Curaleaf. So, we've had our shares of success, but we also have had to withstand the downturn throughout 2019, and luckily, COVID has actually been a blessing in disguise, and revenues have skyrocketed since March with all of our holdings. So the portfolio is in pretty good shape right now.
Yeah, I'm glad you touched on COVID, because that was going to be my next question. So that's a good segue. So how has COVID-19 impacted the industry, both from a consumer's perspective and an investor perspective?
Sure. I'll give you the consumer first. It's demand shot way up, and a lot of that was just people, hoarding and realizing they may be stuck inside for a while. And look, it's a vice product. People, in recessionary times and times of uncertainty, things like this and tobacco and alcohol sales go up. It's the way it works. And so that wasn't a surprise. What was a surprise was the fact that we started converting the illicit market pretty substantially. And what happened was, with the implementation of social distancing and mask wearing and curbside pickup and deliveries, and luckily the regulatory regimes state to state were laxing. They are laxing their strict standards in order for the companies to execute on these items. And so what happened was, you have people that really just didn't want to go to their street corner and buy their stuff anymore, and they were actually willing to go pay a little bit more to go to the dispensaries or do pick up safe products that were either delivered or put on the curbside or what have you. And we're seeing those customers go back, and they're going back and back and back and back. And so not only have we seen new customers, like I said, go into the stores, but we've also seen those same customers come back. And so that's what's been really encouraging. And as I said earlier, sales across the entire verticalization platform or the supply chain have gone up across the board. And it's not just with our portfolio; it's pretty much the industry as a whole. So that's on the consumer side. On the investor side, what's exciting about it is that's been going on, and the metrics of these companies have improved dramatically. In fact, some cases, companies have even shifted to profitability from losses. But for an investor, valuations really haven't changed much, especially on the private side for us. And so we're still able to get access to deals that were pre-COVID pricing, but yet the companies are in much better shape as a result of COVID.
Well, it is evident that, like you said, COVID has been kind of a blessing in disguise for the industry, obviously, with the businesses being deemed essential. The consumer perspective, like you mentioned, how not only with, in-store, but curbside pickup, but I would also imagine e-commerce, right? Like I would imagine online sales just skyrocketed due to everyone being inside and indoors.
Yeah, and that's obviously another aspect, and there's delivery with that, and then the curbside pickup. But for sure, the ability to order it online, to execute on those two mechanisms of procuring the product were big.
Mm-hmm. And then when you talk about the investor perspective, sure, in the sense that yes, these companies are doing better. The evaluations have been the same, I guess, or haven't really changed much. But I would imagine that there's got to be some challenges in terms of that in-person meeting, right?
Yeah.
And so from your perspective, tell us some of those challenges and how you were able to overcome them.
Well, I mean, we haven't made a new investment since COVID, so you're right. I mean, we can't just go and get on a Zoom call and effectively kick the tires of a new investment. That's not the way it works. So that is a huge hurdle. So the truth of the matter is that you can't make a new investment, at least we can't, without really kicking the tires and doing an effective underwrite in person. And COVID's made that next to impossible. We have seen situations where we've been able to go with social distancing and masks, and hopefully that'll continue and improve. But until we can do that regularly, it's going to be really hard to make a new investment during these times. However, one thing we have done is in our existing portfolio, by combining companies, and then we also are looking to create scale with companies that aren't in our portfolio that we know, and put companies together and capitalize those going forward, because we feel like on the heels of what could effectively be a pathway to quasi-legalization at the federal level, the companies that have scale and are getting to the point to where they're larger than they were, say, this year and the year before, those are going to be attractive to the institutional capital that'll come into the space in droves once that quasi legalization occurs.
And these companies that you're looking at now, last time I listened to your podcast with Rena Sherbel. She's been on multiple times, and you mentioned that at the time you hadn't invested yet in testing. So would that be one sector you're considering? And then a follow-up question is, what are your thoughts on the industrial hemp side when it comes to like processing and the manufacturing of material goods?
So testing is certainly something we continue to explore, but since we don't have a position in that in our portfolio, it would require a lot more, in-person diligence. So it's not something that's on the imminent horizon, but we constantly look for new opportunities in that sector. Industrial hemp is a tricky one because it really isn't our core competency, and there's also such a supply glut right now. In the hemp-based the CBD hemp-based products that are, and until that kind of starts to figure itself out, it's going to be tricky. And I don't think that happens until the FDA gives guidance on claims that can and can't be made on packaging. So it's probably not something that we're going to look at really, other than some of our investments. We do have one investment that's CBD based product that doesn't make any claims whatsoever. But getting in on the hemp side is not something we're looking at this particular moment.
Got you. Yeah, it's really still in its infancy. So that makes sense. And to, you mentioned the FDA guidelines. We're waiting for that, even from a sales and marketing perspective, because
Sure.
what you can and can't do on Facebook and Instagram is all over the place. There's really no set standards right now, so it's very difficult. So
No doubt about it, and it's going to continue to be that way until there's guidance. And I think you can't expect that until either if there's a new administration after the first 90 days of getting a cabinet put in place, and then and even if Trump got reelected, I think it's just so far down on the the pecking order of things that need to happen. I honestly think you have a better chance of addressing some of the cannabis issues and vis-a-vis Safe Banking Act and maybe even a States Act before you get some clarity on the FDA. But that's just a personal opinion.
Well, let's dive into that a bit, because that was something that I wanted to touch on, and that's the upcoming election and where the candidates stand in regards to federal legalization. And so, with Trump, I really honestly don't know. I mean, I know that he's said that he's open to the states, leaving it up to the states to decide whether they want to, legalize for adult use. But it's not really a clear stance. And then, of course, with Senator Kamala Harris, she's the Senate sponsor of the MORE Act, but yet she was a prosecutor in California where she oversaw 1,900 cannabis-related convictions, right? And lied about smoking a joint during a time when Tupac and Snoop Dogg didn't even release it. And then you got Biden, who wants to decriminalize. So what do you think the outcome would be with each of these candidates if they were elected, and what's the future hold?
Well, we think the future is bright from a legalization standpoint regardless. I mean, we really don't get into the banter on, who's going to win, who we want to win, what's best for the industry. The reality is this: the federal government, just like every other layer of government, local, state, et cetera, need new sources of revenue due to the impact of COVID. State and local sales taxes are way down. So you're seeing a whole host of states that are trying to legalize cannabis to take advantage of that revenue stream. You've also got municipalities, like even real conservative ones in California, that are choosing now to opt into the legalized platform in that state. At the federal level, again, we've had trillions of dollars go out in stimulus money, and that somehow needs to be replenished, and it's not going to be all from from tax dollars coming in from the citizens. I think having appropriate methods of taxation for cannabis is not going to cure the ill, but it'll certainly help a little bit. And as a result, I think even right of center minded folks are starting to realize that, look, this industry exists. It's here. It's not going anywhere. And if it's there, why not transform it into a legal marketplace that's taxed and regulated? And by the way, it also will reduce crime. It's just that simple. It will happen if you can bring it over to the legalized side of the equation. And so I think people, and before all the noise of impeachment and then COVID, it was becoming a very bipartisan issue. You look at how substantial the Safe Banking Act passed in the House, and it was more than bipartisan.
Mm-hmm.
So I really believe that once things settle down and post-election, regardless of who wins, it may not be in a year or two, but shortly thereafter, I think something like the States Act gets passed, and it's left up to the states to decide. And when that happens, that will open up the opportunities. And maybe with the Safe Banking Act may even do this, but all that needs to happen for more money to flood the marketplace is for the New York Stock Exchange and the NASDAQ to be allowed to list, cannabis companies. And once that happens, institutional capital is going to follow in droves.
Mm-hmm. Yeah, the gates are going to explode at that point, and I agree with what you're saying, and I would even argue that it still is a bipartisan issue, but it's being politicized, right?
Yeah, and I'll say this, and that's what I don't like about it, and because if you notice, like in this latest stimulus package that the Democrats are proposing, they're using the Safe Banking Act as a pawn in there, and I don't like that. I mean, let's let it stand on its own merit and be passed because it needs to pass, but don't put it in this stimulus package knowing that it's going to be yanked out by the Republicans. That doesn't do anybody any good. And so
further delays, right? It further delays the inevitable. It really is what it does.
But that's just politics. It's just dumb politics, and we're in the middle of all that, until at least after election day. So
it's going to be interesting. I know that Arizona's up for vote for adult use in November. I know, and with a few other states, New Jersey being another, right? So that would be huge.
Big states, by the way. I mean, those are both big referendum elections. So, and I think from what I read, it's trending in the right direction for us.
Mm-hmm. Absolutely. So let's switch gears a little bit and let's talk about the capital availability within the cannabis industry. You touched on COVID, how it's kind of slowed things down. But what is the capital availability overall? What's the state of the capital in cannabis?
Well, I mean, there's a dearth of it, and there will be until institutional capital gets into play. I mean, there's really only a handful of groups like us that aggregate capital to support the industry, and it's not enough. And luckily, there's several of us that work together and try to put deals together that make sense for all of us, but that can't happen on every single deal. And so there's really, it's almost like the pool is certainly not limitless. It's very limited on who wants to invest in cannabis and who has the wherewithal to invest in private deals, because private deals, especially when you're aggregating funds, I mean, it requires accredited investors and qualified purchasers, and it's not for the Main Street America, unfortunately, but that's just the way our laws our security laws are set up. And so as a result, they're having to buy some of the overpriced stocks that were back in 18. Now, without getting into stock picking advice, they're probably all back at levels that make sense, but that's really the only option retail investors have at this point. And so we just have a real tough job of going to find the high net worth individuals and family offices that want cannabis, private cannabis deals as part of their asset allocation. And that's what we do all day, every day, is trying to find those folks to join up with us.
And how much has changed since you started in 2014, that asset allocation from these investors? I mean, like, obviously with more public support, people are more open to it. So has it drastically changed, or is it still some convincing involved?
It has changed, a whole lot. I think saying drastically would be a stretch, because we still do have to educate people a lot. People are still willing to take, yeah, I'll take a flyer on this one, but we're now raising enough money to where we need to get some pretty significant commitments in, and that takes a lot of education. Mm-hmm. And luckily, we have the track record to back up our performance. And without getting into all the gory details, so the SEC will come after me, but we still have our work cut out for us getting in front of the people to tell our story.
Right, right. Well, I know that y'all focus on, of course, the private equity side, obviously, but are there any publicly traded companies in Canada or in the US that you're particularly impressed with? Maybe specifically some MSOs?
Yeah, I'll just talk about the ones that are in our portfolio. I mean, we own, we were investors in TerraSend, and we had a kind of an off-market deal where we got a bunch of warrant protections, so we're big fans of theirs. We're big holders of GTI over the years. We own Curaleaf through a couple of acquisitions or sales to them from our existing companies. We're also big fans of Cresco Labs and Trulieve and all the big. We even think there's some, and I think Acreage has some. They've started to right their ship a bit, and with their impending deal with Canopy, I think there's going to be a good story at the end of that. And even Harborside's on our portfolio, and they're I think very, very undervalued. They're EBITDA positive and have been for several quarters now. So a lot of good activity on the multi-state and single state operator level. We also are investors and owners of Akerna, which is on the NASDAQ, which is a enterprise software play in the space. So even though we're private investors, we still own a lot of public securities through sales or the reverse takeovers that went into play on the CSE. But then we've also done, like I said, one private investment into a public company, which was TerraSend.
Mm-hmm. How about in the ancillary space? Any particular companies that stand out there?
Well, I mentioned Akerna. They're in the ancillary space with the enterprise software. We have invested in a few of the biosynthesis plays. Celebre is an exciting company. We've also done some of the genetic work, and one of our the breeding company Conception is a really nice story. But there's also picks and shovel plays that we see all the time that are intriguing, and that I'm sure will be part of a strategy that we're looking at in Fund 3 with putting those types of companies together to create that scale I talked about earlier.
Absolutely. I know that you're a busy man, Matt. I have one last question for you, and that is, what opportunities do you see internationally? Are there any countries that really kind of stand out and doing some innovative things that catch your attention?
Sure. We were pretty active looking around in Fund 2. We made an investment in a Israeli technology for it was a delivery mechanism, and there's obviously always great intellectual property coming out of Israel, and in this industry in particular. We have an investment in a company in the Netherlands that's about to be one of the providers of product for Germany when that opens up, and they're going to be one of the first license holders in their sector. So that's a huge deal for us. So we keep an eye on the EU quite a bit from that. But you also have opportunities, coming on the cultivation side in Colombia, maybe even Mexico. And that's going to be a very interesting story to watch, is how the low-cost producing world of cultivation comes into vogue. Because remember, when Canada was set up way back when, they were trying to be the mass exporter of product, but the cost structure doesn't work up there for that. And so when you have the opportunities to move product from one country to the next, starting in South America, that brings up a whole nother opportunity that I think we're still several years away from, but it's going to happen.
Mm-hmm. Right. Well, is there anything that you want to leave the audience with? I know that we're going to be entering this post-COVID world. So if there's any investing opportunities or things that you want to say, I think that they'd appreciate hearing it.
I think just we're happy to put people on our newsletters and keep them updated with all the things that we do. And you can just reach out to me at mhawkins@eecpartners.com.
Awesome. Well, Matt, I really appreciate your time. Thank you so much for sharing all your experience and expertise. And hopefully we'll have you on again real soon.
Great. And maybe next time we'll do it in person since we're in the same city.
Exactly. I know. It took us long to figure that out.
All right. Y'all be good. Take care.
All right. Thanks for listening, y'all. Bye.